What's going on, guys? This is Amish APJ, and I'm going to be reviewing our last week of trading. So October 27th to October 31st, we took a total of 16 trades on stream live in the Discord. Over those 16 trades, we had an 87.5% win rate. That's like one or two losses, one break even, and the rest were all green. So as you can see here, I just started these Apex accounts on Monday, last Monday, the 27th. This is a live Tradeabate login, just covering my Apex ID, but you see this is a PA account. So I'm up $2,200 on each one of these 8 accounts. So that's a total of 17.6 grand in profit I made last week. 16 trades here and an 87.5% win rate. Like I said, you can see the charts in the various graphics of that breakdown here. So let's get into these trades and see what we took. So by now, if you guys have watched any of my content, you're familiar with the model I trade and the model I've refined over the years. It's basically higher time frame narrative along with lower time frame precision, right? I need context, I need bias, I need drawn liquidity on those higher time frames. Then I drop down to lower time frames and I actually execute on the 1 minute and 30 second. My positions generally last anywhere from 30 seconds to a couple of minutes, and they're never more than 5 or 10 minutes. So I'm going to go over the highlighted trades of the week, right? Trades that really stood out to me and explain why we take them, and maybe explain some trades we don't take, right? Why we avoid certain setups based on discretion. So this was our first trade of the week. This was Monday. You see, this was the opening candle here, 9:30. We moved up. We swept some highs. We come back down, do the same thing. We sweep some lows. So, typical Monday price action, taking out liquidity on both ends. And then we form a bit of a range here, right? So we have this range from high to low of the session, right? Pretend this stuff doesn't exist. 859 to 796. That's a decent range, about 64 points. Price continues to hover around equilibrium. I don't take any trades just yet when we are sort of right here. So if I go into replay mode and cut these candles out, we'll see that because we swept buy side up here. Oh, that's the wrong button. We swept buy side up here, right? And then we came down and swept sell side. I was sort of just waiting for some direction to form. So I didn't take this 1 minute inversion long. We had reacted to this order block pretty bearish. But on the second candle here, we formed equal highs, relative equal highs. If you know me, I love trading towards equal highs or equal lows, just for the reasoning that the probability is a bit higher, right? Price wants to take out those buy stops, creating multiple levels there. So we have this bearish fair value gap that formed on the 1 minute, okay? Price made one push up, didn't succeed, left equal highs. We get the formation of a bearish gap here on the 1 minute, and then we stab into it a couple times and then eventually close above. We also closed above this 1 minute volume imbalance. That's really important for me. Now, if I were to buy up here and target these equal highs, the risk to reward would be awful, right? Really, really bad. Not even 10 points of reward, and a ton of risk there. So what I did is I waited for a retracement. I took an entry. We have the trade here on the left. So my entry price was 83475. So I waited for a retracement, put my stop at the low of this displacement candle, and I was filled on the next candle right here. So I'm in my position now. It looks like I'm going to be stopped out, right? But, we let price play out. We see the bias is correct. We start moving back up. And not this candle. Here we go. So on this 3 minutes into the trade, we took profit, right? So here was our exit at those equal highs. This is why I love equal highs and equal lows. Very high probability, right? With proper stop placement, you can expect a high win rate. So yes, I could have got a better entry in hindsight, but in the live market, you never know when price is actually going to retrace and just how much. So I was satisfied with this, 0.89 risk reward. That's more than enough for me. You see an 87.5% win rate. I can take 0.89 risk reward trades any day of the week. So that was trade 1 on Monday. All right, so on the left of my screen, you can see this is our trade in real time on Monday. This was that first long we just went over. Our second trade was a short, just about an hour later. This was a 30-second short, so that's why you're seeing this screen here. This was the trade. So we continually push up, we sweep one high, sweep another, and we get a reversal here. Price comes all the way down here and then inverses this 30-second gap. And then we enter on a retracement to this freshly formed bearish 30-second gap. This was my entry here. I wasn't going to sell down here and chase it, but we did have a fresh 1 minute, if you see on the left of my screen, down here as our draw. So I got in at 882. Look to the left of my screen right there. My stop was at the swing high, and we targeted this fresh 1 minute bullish fair value gap. Got about 11 points there, 1.18 risk reward. So it was great, right? So sell here, stop here, take profit down here. Fantastic trade. Monday was beautiful. 2 winners, 100% win rate. That's all we took. Okay, jumping forward to Tuesday, like I said, I'm going to go through these a little bit quicker. I can't spend 5 minutes on every single trade. This video would be too long, and I know most of you guys just want the highlights. So Tuesday, this was our open here. We rally up. Obviously, we sweep highs here. We come right back down, and we sweep some internal lows. So this was our New York low at the moment, right? This candle here. We sweep that low. We also sweep some of the lows and react to this bullish 1-minute fair value gap. And then we got the following setup. So this was another 30-second trade. It was a 30-second inversion, and it looked like this. Our draw, to preface this, was this fresh 1-minute bullish gap here. Okay, so we took an entry right around here on this 30-second candle. So as you can see here, this is the same action, just on the 30-second. We formed a bearish 30-second fair value gap here, and then we got an inversion of it right here on this candle. Price closed above that bearish 30-second candle. We took an entry on a little bit of a retracement at 5.4, and then we sold at that fresh 1-minute fair value gap. Here on the left of my screen, you see 0.79 risk to reward. I had a really loose stop on this. In retrospect, I didn't need to, but I wanted to put my stop at the swing low. So my entry was 5.4. That was something like this. Stop was down here. And then my TP was 6.5, which was right here at this fresh 1-minute. So that was the trade, right? We took this to the upside. That's how we started Tuesday. So New York lows swept, 1-minute bearish draw, 1-minute fresh bearish fair value gap as a draw, and 30-second inversion to the upside. That is how we began the day Tuesday. Not too long after, on Tuesday, we took this long on the 30-second. As you can see here, price closed above this bearish gap. We had just swept lows here and then once more here. We were in a prior existing bearish fair value gap, but after price quickly came down and right back up, that told me that bears were not strong enough to continue lower. So we took this trade. We exited up here on the 1-minute, right, for 1.28 risk to reward. So price came down. We let it do its thing, closed above this 30-second, and we got out up here. All right, final trade of the day on Tuesday. This was the day we actually went 3 out of 4, so we did take a loss on Tuesday. Price just didn't play out, but this was our last trade, which was a winning short. We swept these highs here, so continually sweeping highs and coming back down. We expected the same thing to happen here. We did that. We inversed 1, 2, and 3 30-second bullish fair value gaps. I wasn't going to short this close. Risk reward would have been terrible. Instead, I waited on an entry at this fresh bearish 30-second fair value gap. Took that entry and targeted this low here. As you can see, the trade played out. So it looked just like this, right? You see to the left of my screen, those were the perfect executions, right? Nearly perfect entry and a great exit as well. This was an entry at 4.2 and an exit at about 3.4. So just shy of 10 points. Great trade. 75% win rate on Tuesday after a 100% win rate on Monday. All right, this was my favorite trade on Wednesday. It was a short. Price came up, came down. We had trendline liquidity here. We got a 30-second bearish inversion here. I took an entry, just on a little bit of a retracement before we had actually swept these lows. And I put a stop at this 1-minute swing high, right? So you see that on the left, we were in a 1-minute bearish gap. This was our swing high. Took an entry at 280, which was right here. And I did take some drawdown, but my stop was perfect. And I got a great exit as well. So that was, just shy of 1-to-1 risk to reward taken Wednesday. Some highlights of Thursday, the 30th, we had this 30-second short. A lot of our entries are on the 30-second. That just so happens to be where those precise sniper inversion entries are. But again, we're using context of all time frames. So 4-hour, daily, 1 hour, 15-minute, 5-minute, all of those time frames come into play. Anyway, on Thursday, we had this high of day sweep here. We got a reaction, and we inversed this bullish 30-second gap, giving us our bearish entry. We took this entry targeting this fresh 1-minute fair value gap over here. As you can see, more trendline liquidity as well, which got absorbed, and this went straight to profit. Our final trade on Thursday was this 30-second inversion long, again, targeting a fresh 1-minute fair value gap. So you guys are seeing a trend here. I love targeting these fresh imbalances because that's what they are. An imbalance in action that, price, algorithm, market, whatever you want to call it, is seeking to rebalance those imbalances. So our 1-minute bearish fair value gap was our draw. We got this tiny 30-second inversion. This is the importance of being zoomed in, right? Being able to see every imbalance in the market. It doesn't matter how big or small. I don't care what people say. Oh, it's too small to be considered a fair value gap. If it's 1, 2, 3 candle pattern, the second candle has some gap in overlap, that is a fair value gap. By ICT's definition, that's an FVG. So any close above or below is an inversion. And with that context, we potentially have an entry. So price had established our range, right? High to low. We were traced into a discount. This is not the low. Market was already lower than that. But anyway, we're traced into a discount. We had that fresh 1 minute bearish fair value gap as our draw. We had this small 30-second inversion there. Took that at an 8-2 entry right about there, and we got out at, for this was actually a great trade. We had equal highs here. We got out at about 15 points at 9.7. So this was a phenomenal trade. Stop was just at these wicks, as you can see here to the left of my screen. 0.94 risk to reward, fantastic trade, and that was Thursday. Finally, here on Friday, we started the day with a magnificent short. So every morning I post my analysis before the open. So I posted this at 8:18 Central, about 12 minutes before the open. I told you guys my draw was 26144 low of day. This was because we had swept high of day overnight. We had come down and we had a very clear draw before the open. So my explanation is there. I told you guys 26144. That is my draw for New York session. Hopefully we can catch a trade toward it. And like I said, we were fortunate enough to do that. So this was the open. As you can see, we sold off hard. That's a good indication our draw was correct. And fortunately, we got a retracement before our 144 draw was hit. So this red line here, this is 26144. This was prior low of day that was established overnight. We drew down toward it. We got a retracement up. We rejected this 30-second bearish fair value gap. So that's our bearish delivery array. We came down, we inversed this bullish 30-second. So that's our entry. We took an entry on a retracement, and we took profit at our low of day draw that was anticipated pre-market. So this was a great start to the day. 10 points there secured, right? 1.02 risk to reward. That was a great way to start. So it's always nice when analysis and execution line up. Sometimes, price goes to our draw without an entry. That's okay. Our analysis was still right. But in this case, on Friday at the open, both of those lined up. All right, the way we ended the week was with these longs. So one was successful. We had a break even, and then we had this final winner. You see price was in a little bit of a downtrend. It got a little bit choppy, but then we had a beautiful V-shaped recovery here. Anytime we see a V-shaped recovery and we're expecting a reversal based on bias and higher time frame fair value gaps, that's an A+ setup. So this was the beautiful trade we took on Friday. We had this 30-second inversion here, right? So we bought this close and we sold. This was our target. I sold a little bit early. I was trying to be conservative and protect some of those profits we made. But this was the trade, right? Entries here, draws here, stop can be low of this displacement candle, right? So we're buying at about 8.6, targeting 112. Could have got out early at 26,100 at this fresh fair value gap. But that's the strategy, guys. This happens every single week, right? Sometimes, we have red days here and there, but every week is generally green because of the power of scalping. This is a high frequency approach to trading. Now, we don't overtrade, we use discretion, but there's always setups every single day, right? Every day in the market, there's a setup for us. We're not hoping and anticipating that, oh, hopefully I get a trade today. Hopefully, things line up. The beauty of trading and taking entries on such low time frames is that you're always going to have opportunity. Now, if you want to learn the discretion and all of that good stuff, that's where I come in and want to help you. But this is truly, in my opinion, the best way to trade because we're using prop firms, so we're not using our own capital, and we're trading in a risk-adverse perspective in the market, right? I'm not holding trades for 20 minutes. Lance Breitstein, an 8-figure real money trader, even says, it's a lot easier to have an edge for the next 2 minutes rather than the next 20, and it couldn't be any more true. Right? Too many people come into the market expecting too much and demanding too much, right? Oh, I want to be right, and this trade is going to happen, and I want to catch this 100-point move. That's all great, but let's see who's actually making money, right? Let's see who is consistently pulling out 5 figures. Guys in my Discord, we had a guy last month hit his first $5,000 a month. Okay, from no payouts in his trading career from September and prior to October being a $5,000 a month after he learned our system. Another guy also got his first payout after only 1 month in the group with us. Got his first payout last month, and another member had a first $10,000 a month. This is the power of my strategy and what I'm hoping to give to you guys. If you guys don't already know, I'm offering a 7-day free trial. If you want to trade live with me every single morning at the open for about an hour, join it for absolutely free. If you don't like it, you can cancel. No obligation there, but 7 days free. If you like it, stay on with us, get those payouts, and I'll see you in there. So link in the description. If you like these videos, feel free to give it a thumbs up, subscribe. I'm always posting short form videos on my YouTube, my TikTok, my Instagram. Every day I post a short form video, some quick bite-sized educational videos. And then a couple times a week, I post these long form trade recaps and strategy breakdowns. So guys, subscribe if this is appealing to you. Join the Discord. If you don't want to sign up for the trial, if you just want some free resources and get your feet wet, I also have a completely free, no obligation, no credit card membership for that as well. Link in the description. I'll talk to you guys later. Bye-bye.